Welcome everyone to Vested Interest. This is Shane back for a stock pick of the day video. It is almost the end of another month, July 29th here. I believe there's one or two more days in the trading week. Today we're going to take a look at Caterpillar. This is out of the industrial sector. Let's jump in. And before we get too far in the video, if you could do me a favor and hit that thumbs up button down below if you find any value in the content. Make sure you are subscribed to the channel. Join us on this journey to financial freedom. Join the Vested Interest community. Make sure you hit that notification bell so you're notified whenever we put out any new videos. I do subscriber and viewer requests, so if you have a company like Caterpillar you'd like me to cover in the Stock Pick of the Day series, go ahead and drop it down in the comment section below, and let me know what you think of the videos in the comment section below as well. And again, thumbs up, make sure you subscribe, hit the notification bell. Doing all that really does help a small YouTube channel like mine with the YouTube algorithms, helps to spread the videos a little bit longer. Also, watching the videos to the end or a little bit longer than you normally would, watch time is another one that the YouTube algorithm uses to push out the videos. So thank you to all of the subscribers and viewers out there. Really appreciate you. The channel continues to grow because of people like you. Now, this is the Vested Interest Stock Screener. This is how I look at a company on a high level. Thousands of companies out there. It is a way for me to initially review the company, see if I'm interested in adding it to my watch list. Then if it does meet the screener, that's 5 of 8, or if it's a bank or an insurance company, something in the financial sector, I throw in price to book, and then it must meet 6 of 9. Then it goes onto my watch list, and then I do more of a deep dive into the financials, looking at stuff like the debt to equity ratios. Is the revenue growing over time? Are their margins expanding? Are their sales increasing? Are they paying down debt? I like to look at PEG ratios, price to book, compared to other competitors in similar industries. A lot of other good information that you should be looking at in the balance sheet and income statement. And if you do not want to do that type of a deep dive into a company, you should not be investing in individual stocks. Never just blindly buy something that you see someone on YouTube suggesting or buying. Make sure you're doing your own research. And again, if you don't want to do that type of research, you should stick to index funds or ETFs. And there's nothing wrong with that. Warren Buffett would recommend something that tracks S&P 500, so something like a VOO, VOO with Vanguard S&P 500 or SPY. I believe both of those are in his 13F. He owns both of those. And famously, Warren Buffett once won a betting, I can't remember exactly who it was. You could look it up. But I believe it was a hedge fund manager, betting a hedge fund manager. He could pick any stocks or any funds that he wanted, and Warren Buffett would pick the S&P 500, and he bet him $1 million, and guess what? It was the S&P 500 that won. So again, nothing wrong with investing in index funds or ETFs. I would recommend what Warren Buffett would recommend, VOO or SPY or some other fund that tracks the S&P 500, even though in my personal account I invest in VTI, which is the total stock market, United States stock market, and SCHD, which is a dividend growth ETF from Schwab. So those are the two I invest in. But again, Warren Buffett would recommend something that tracks the S&P 500, VOO, VOO, or SPY, SPY are probably two good ones out there. Now let's jump back into Caterpillar. You can check them out at www.caterpillar.com. That's www.caterpillar.com. That is their homepage where I pull this information from. With 2023 sales and revenues of $67.1 billion, Caterpillar Inc. is the world's leading manufacturer of construction and mining equipment, off-highway diesel and natural gas engines, industrial gas turbines, and diesel electric locomotives. And that's really their bread and butter. If you've passed by a construction site or road work or something like that, you have probably seen some Caterpillar equipment working on those sites, or maybe some generators that use Caterpillar motors. And then on the bottom here, you can see the little dots. Hopefully that came through and that's not too small for you to see. But these are all the different Caterpillar locations across the United States, South America. Looks like they've got one way down here in the bottom of Africa, over in the Middle East, over here in Europe, over in Australia. So they are over in Asia. They are spread across the world. They are not just focused on the United States. So that is good if the United States or South America or Africa or one of the countries has a slowdown. Hopefully the rest of the areas around the globe that they are involved in don't have a slowdown, and you may be able to benefit from those other countries as well. We are talking about Caterpillar Inc., ticker CAT, out of the industrial sector, down 1.7% on the day, closed out the day at $344.53. 52-week range as low as $223.76, as high as $382.01. So they are still closer to their 52-week high than their 52-week low. Market cap of 168.493 billion, a beta of 1.11. You can see that volatility right here. So they are more volatile than the overall market. Price to earnings ratio, pretty nice, $15.58 per share. I like anything under 18, typically under 18. Really depends on the company, but typically I look for things under 18, and under 15 is even better. So this is right in my wheelhouse, but the valuation may be a little rich even with the PE where it is. Earnings per share, EPS, sitting at $22.12 per share. So this is one of those rare instances where the earnings per share is actually higher than the price to earnings. Earnings date, August 6th, 2024. So that is coming up here next week. And it looks like they are going to, the ex-dividend date was July 22nd. So we're past the ex-dividend date, and their payout will be on August 20th. So you would not be in line for anything unless you owned them before the July 22nd dividend. If you were to buy them now, you'd get the next dividend, but not the one paid in August 20th. You'd have to wait a few months for the following. Forward dividend is $5.64 per share per year. They are a quarterly payer, so divide by 4, though we'll show their per quarter price here in a little bit. Yield of 1.61, so they are pretty low. Obviously, if you were to get them close to their 52-week low, you might get them in the low 2s to maybe mid 2s, depending on where you bought them. A little lower than what I like as far as the starting dividend yield on this one. Ex-dividend date, again, July 22nd. And a one-year target estimate, at least according to Yahoo Finance, $298.55. So they actually see this one coming down over the next year to this one-year target estimate, right? It's obviously above where their one-year target estimate is, at least according to Yahoo Finance. Now we're going to jump over here to the right. We're going to take a look at dividend yield theory to see if this one is potentially undervalued. To do that, we look at their 5-year dividend yield average. We compare it to its current 1.61%, or over here where it says forward annual dividend 1.61%, same number. So the current is the forward number. And since it is lower, that actually speaks to some potential overvaluation here. So according to dividend yield theory, this one is potentially overvalued. Payout ratio is 23.05%, so a lot of room to continue growing that dividend, paying down debt, making acquisitions, all the things that companies do with free cash flow. And since we're speaking of free cash flow, we're going to jump down here and look at free cash flow. We want growing free cash flow over time. Typically, if a company has growing free cash flow, they grow their dividend along with it. 2020 here, they were at $4.2 billion in free cash flow. 2021, jump up to 4.7, 2022 a bigger jump up to 5.1, and a big jump in 2023 up to 9.7 billion. So nice steady free cash flow growth, as well as repurchasing their own shares. So not only is their free cash flow growth growing, but they are repurchasing their own shares, and that is growing as well. 1.1 billion in 2020, 2021 2.6, 2022 4.2, and 2023 4.9. So very nice steady free cash flow growth, and utilizing some of that free cash flow to repurchase their own shares. Really like that combination there. Now we're going to jump over to stockanalysis.com. That's another source that I go to for information. You pick any sources that you like. I just always recommend more than one so you can make sure the information you're getting is accurate and up to date. Now they have 16 stock analysts that have taken a look at this. They actually call it a consensus buy, though they are close to a buy and a hold. This would be a strong sell, a hold, a buy, and a strong buy. And if you were to go to stockanalysis.com, you could click on each one of these and see how many of the 16 analysts might call it a hold, might call it a sell, or a buy, or a strong buy. I don't think any called it a strong sell. I do believe we had a couple sells, mostly holds, and some buys here, mostly holds and buys. Now, they have a low estimate of $245, which would be a 28.89% decrease from where it currently sits. Average estimate of $331.63. That would be a 3.74% decrease from where it currently sits. And the only way you'd get any capital appreciation on this one, if it happened to hit their high of $435, that would be a 26.26% increase from where it sits. All the while, you could collect that 1.6% dividend yield. We're going to jump into statistics here. We're going to go over and see how financially efficient this company is returning capital back into itself, reinvesting back into itself. And we look at return on equity and return on invested capital. I like 10% or better for both of these metrics. Return on equity sitting at 59.3%, smoking high. And return on invested capital, very nice at 19.9%. EPS growth, I like forecasted 5% or better over the next 5 years. They have it at 0. So they are not forecasting any EPS growth. Their EPS is pretty high already, so not a huge shocker there, though I would like to see it growing over time. Revenue growth forecasted 4.4%. Now, looking at dividend history here, again, they are a quarterly payer. Payout ratio very low. They say 25.49. I think Yahoo Finance said it like 21%. Either way, well under 30%, under the 75% I'm looking for. I like 75% or lower. Dividend growth is high single digits at 8.37%. Very nice dividend growth. 31 years of dividend growth. Buyback yield is 4.33%. So that tells you they are efficiently buying back shares. Shareholder yield at 5.95%. They do pay out on the February, May, August, November timeframe. So most companies pay out in the March timeframe. So this is nice to see as well. And going back to January 19th, 2022, they paid out $1.11. April of 2022, July 2022, they raised it up to $1.20. July 2023, they raised it up to $1.30. And most recently, July 2022, they raised it up to $1.41. So I would anticipate if they continue this growth streak in their dividend yield, they will raise it up in July of 2024. So currently $1.41, and that's where I'd expect it to remain the rest of the year into next year. Very nice numbers overall. Let's jump back over to the screener and see how this one stacks up. So understand the business, that's where we started. Check there, growing free cash flow, nice growing free cash flow, and using some of that free cash flow to increase their repurchase of shares as well. Growing dividend, yes, it is. Dividend payout ratio under 75%, yes, under 30%, very low dividend payout ratio. It is not undervalued according to dividend yield theory. It is not in my it is not in my portfolio, so it is not below my cost basis, and it is not within 15% of a 52-week low, so no check there. Return on invested capital and return on equity, very nice numbers there. Check there, but it does not forecast out 5% or better earnings per share growth, so no check there. So we're looking at 1, 2, 3, 4, 5. This one is on my watch list and would still go onto my watch list. I am just waiting for a better price. And really, there's a couple other companies in the industrial sector I might like a little better than this one. Union Pacific, I'd like to continue to build out that position. Owens Corning is one in my portfolio. I'd love a pullback there. Industrials overall seem to be a little on the high side outside of a couple companies like Snap-on, I think, is one that still is showing a bit of value. Genuine Parts Company is another one that's showing a bit of value. This one, I just want to see more of a pullback on this one. Let me know what you think in the comment section down below. Well, as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community, building a community of like-minded dividend growth investors so we can share our experiences, share our wisdom and knowledge in the comment section down below. And again, let me know what you think of Caterpillar. Let me know what you think of this company here. Is it one you're buying? Is it one you're holding on? Is it one you're selling maybe, since it is close to a 52-week high? Love to hear from you in the comment section down below. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So again, if you have a company like Caterpillar you'd like me to cover in the Stock Pick of the Day series, drop it in the comment section below and I'll work it in the rotation. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, hope you have a great week. We'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I am only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can lose money and should never invest any amount you are not comfortable losing. Always do your own research, invest based on your situation, circumstances, and select the criteria, or seek the advice and counsel of a certified financial advisor.